Hello traders, Gary Wagner here. It is 11:45 in Honolulu, 5:45 in New York on Wednesday, 29th day of June 2022, and this is the Daily Report for gold and silver. A combination of statements made by Chairman Powell today at the ECB's annual conference, as well as advanced data suggesting that tomorrow's PCE inflation index report would come out indicating that inflation remains exceedingly hot, roughly triple the acceptable level by the Federal Reserve, which has a target of 2%, pressured gold to close lower by $2 at $1,819.20. Today's modest decline in gold was 100% the end result of dollar strength. The dollar was up almost 0.6% and is currently fixed at 104.865. You can see the dollar index moving sharply higher over the last 2 days. This in anticipation of higher interest rates and higher yields on U.S. debt instruments, which lends support to the dollar itself. Recent strength in the U.S. dollar and high levels of inflation suggest that market participants continue to focus upon rising interest rates above their focus upon rising inflationary pressures. However, as many analysts, including myself, believe, if the Federal Reserve continues to raise rates, but inflationary pressures do not come into alignment, there will become a point in time in which traders and investors will shift their focus from rising interest rates to the fact that the Federal Reserve simply cannot curtail inflation. That means that even though tomorrow's report is expected to reveal that inflationary pressures continue to run exceedingly hot, which would normally have a profound and bullish impact on gold, we could see the opposite reaction tomorrow, taking gold to lower pricing. If in fact that happens, we want to see if gold can hold $1,800 to $1,805. That is our first level of potential support, and a hard break could take gold as low as $1,786. One thing is certain: if the Federal Reserve cannot bring inflationary pressures into alignment with their target, that pivot will occur sooner than later, and at that point we will see gold move substantially higher. That pivot could come tomorrow if the actual PCE report reveals that inflation is higher than current forecasts. But one thing to me is certain: at some point, market participants at large will come to the realization that interest rate hikes by the Federal Reserve alone will not solve our current dilemma and bring inflationary pressures in alignment. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the daily update and review. Bye-bye.